All right. Hi, everyone. First of all, thank you all for joining us. For those of you who would like to have translation, we do have equipment circulating, so just put your hands up and we'll get those coming your way. And what a great year to hold this panel, right, guys? I'm excited. Certainly been waiting to see all this activity. I'd like to maybe kick it off just sharing a few numbers just so that we all get a sense of what's going on in the market right now, right? So in 2025, we've seen 5 IPOs in the US and a few outside of the US as well. And I'm not including here BTC Treasury companies, which we'll be talking a little bit about today. So names like Circle from the stablecoin space, eToro, Bullish, Gemini, and more recently Figure, which is one of the prominent names in the RWA space, one that we're also very involved with here at Mercado Coinbase. They join companies such as Coinbase, Galaxy, who we have supporting our event here today and have just recently moved their listing to NASDAQ as well. These listings raised over $3 billion as they went public this year. And we have a number of additional filings that point to quite a bit of expected activity until the end of the year as well. So should make for a very exciting 2025 altogether. We've also seen a lot of activity around M&A, almost 80 transactions in the digital assets ecosystem in Q2 alone this year. We're seeing double-digit revenue multiples for most of these IPOs and for a lot of the landmark deals we've seen in the space as well. And we've seen more and more another interesting trend, which is a crossover between players from the traditional financial services space into the digital asset ecosystem as well. Robinhood had acquired not too long ago Bitstamp, one of the oldest running crypto exchanges out there, more recently WonderFi. So more and more we're seeing this big convergence happening in multiple different manifestations. I think for newcomers to the space, it may feel like it's the beginning of a great adventure for us who have been building and investing in the space for a number of years. I think it's really the culmination and validation of many years of hard work, of educating and dialoguing with clients, investors, regulators, and really building on this belief of the transformative power of blockchain technologies to revolutionize financial markets and services to new levels of efficiency, transparency, and access. We'll be talking a lot about that today. Let me briefly introduce our panelists here. Two of them are among my 2 favorite investors who have been backers and supporters. So Benjamin Lizana from SoftBank is an investment officer who covers Latin America with a strong focus on fintech and blockchain-related technologies. Ben actually led the investment process at MB in 21, so we've been working together for a number of years. Randy Little is a partner at 50T Funds, which is a leading US-based investment firm focusing exclusively on investments in the digital asset ecosystem, and who has backed a lot of the names that we've seen go public this year or involved in some of the landmark transactions in the space. These include companies such as Circle, eToro, Deribit, who was a sponsor here of the DAC edition last year with us, and are also shareholders and investors in a number of other reference players such as Kraken, Ledger, Animoca Brands, and of course, Mercado Bitcoin as well. And Guilherme Gomes, or Gui Gomes as people call him, is the CEO and founder of Orange BTC, a Brazil-based BTC treasury company who I had written down according to rumors in the media, but today I think it's official, is shortly going public with an expected listing to be announced early in October. Orange BTC will be the largest Brazilian-based BTC treasury company with over $400 million in assets as it goes public. I think that places you as well among one of the 20 largest treasury companies globally. So congrats, Guy. We're super excited to see that bell ring in the upcoming weeks. And Guy's background in crypto is extensive. He's worked for a number of years at Swan BTC in the US, and previously was at Bridgewater Associates, one of the notable hedge funds run by Ray Dalio in the US. So let's kick it off, guys. Randy, I'll kick off with you. 50T, as I mentioned, has been quite involved in a lot of the landmark IPOs this year. I think reaping great results from those early, I don't want to call it bets, but beliefs, right? And I wanted to get a bit of your sort of front seat view on how capital markets perception around crypto digital assets has evolved. What's driving interest and demand? It seems to be, all these IPOs have been significantly over demanded, very, very strong multiples, both on listing and post-listing, and sustaining quite well so far. So what's your read there on how investors perceive the space, the opportunities, and what's ahead?
Yeah, I think from a fund perspective, the thesis that we had a number of years ago has really started to play out. One of those things is that the market would transition from something that is quite a retail-driven market. I would say it's I think it's the only capital market that I think was retail-driven almost exclusively when it started. We thought that institutions would eventually come, and I think that now we're really seeing that manifested. A really big change that's obviously been the ability to access the space through equity, I think, has been a big thing. Our fund only invested in equity over the past couple of years. Within the crypto space, I would say that was almost an out-of-favor strategy. Most crypto-focused investors were focused exclusively on tokens. Obviously, a lot of our companies have a lot of token exposure on their balance sheet, but we always had the thesis that equity would be very important. And I think it's just, if you just step back and we think about things from a very macro perspective, the amount of capital, and this goes without saying, the amount of capital outside of crypto is just so much vastly larger than inside of crypto. I think just the equity has created a conduit that allows for an easy path for that capital to get into the space, has been a massive change. We've seen that manifested in the IPOs this year, like a lot of the ones that Daniel had mentioned. I think there's going to be at least 5 to 10 more over the next year that are significant. Also, we've seen the digital asset treasury trend that's kicked off. I mean, obviously, MicroStrategy has been doing this for a number of years, but just in this year, there's been massive proliferation in that strategy across not just Bitcoin, Ethereum, but across a lot of different altcoins, and I would say getting pretty far down the tail of even higher risk assets. So I think that all this capital coming into the space has been a big change, and I think the interest initially has been in a few areas. One of which is anything that's payment related or stablecoin related. I would say anything that is in the RWA space, and I think the common theme among these things are areas where it's very easy for a person who's invested in particular in tech or capital markets in the traditional world can see a close analogy for how blockchain digital assets improves on that experience. So that's typically their first port of call. So I would say anything payments related, RWAs, also exchanges are quite easy for people to understand. accessing liquidity, aggregating liquidity, and serving customers in a centralized exchange format is something that has proven to be, quite popular. I think we'll probably get to this later, where I think we're still a little bit ahead of our time. I think that it's going to be a little bit longer before the traditional markets accept DeFi. We've seen this we're now pretty big investors in Coinbase even. And if you look at what Coinbase has done with Base, their L2, I think it's been tremendous. It's a massive, I think, achievement that they've created. I think it'll be a great option on the future. But the public markets hardly focus on it at all. They don't get any questions on it. They barely talk about it to the public equity markets. I think that'll come, but that's still a little bit on the horizon.
That's great. I think there's a common thread there, if I caught your drift right, Randy, which is, in a sense, companies that are building the bridge between, TradFi and the broader financial system into a BlockFi world seem to be easier to understand, easier to evaluate. And Ben, I'd love to get your take on that because, I know you. I failed to mention, but I know that Ben was a Bitcoin miner back in the very, very early days. So I think you followed really everything that's going on, and I think you had a privileged view as well in the whole sort of fintech revolution in Brazil, in Latam. I see a bit of an analogy there, right, with these transformational technological waves. So I'd love to get your take on that sort of bridging between where we are in the digitization and what blockchain will unlock and unleash ahead, and particularly around these movements, public markets, etc. How do you see that trickling down into private capital, into the space, so that we can further accelerate building in the ecosystem?
Yeah, no. So I would maybe start by saying that I think Brazil has done a great job from an entrepreneurial standpoint in the innovation of technology, financial technology, and just pushing forward the barriers of what was possible on the payment side, on the stablecoin side, on the real-world asset tokenization side, right? I think PIX is the first, big achievement and accomplishment, benchmark worldwide for success, and has set the stage for the next turn application from what was retail on PIX to what is more on the B2B or corporate side for Drex, right? Although Drex being a technology that is still in the process of development and the frameworks being figured out, it's very promising because it brings to traditional and TradFi markets the ability to settle instantly, cross-border without the restrictions that existed, bring liquidity to asset classes that were at some point thought illiquid. And so I think that Brazil has that agenda of just innovating across the space that I think is very unique, at least at the level of emerging markets, and also a source of inspiration for other developed economies. The U.S. thinking about FedNow and consulting with the Brazilian central bank, and hey, what are the best practices, right? How does that trickle? How does that combine into crypto? Of course, I think the inspiration of, and it maybe is a chicken and the egg, but what PIX achieves is exactly what I think crypto envisioned in the first place, right? Instant settlement, 24/7, easy, unfrictioned movement of capital, of money. I think what's interesting or what we're seeing right now from a technological standpoint is now you're going through the second, third derivative of that. There's this large opportunity in Brazil in the credit space, large asset class, $500 billion of credit asset class that is illiquid or somewhat illiquid or less liquid vis-a-vis other types of assets. That all of a sudden, if you can tokenize, if you can find a way to bring on chain and use the power of crypto, the reach to distribute, you all of a sudden find liquidity for an asset that in a market like Brazil that loves fixed income, would have major demand. That is another point of innovation where I think Brazil has been leading, and it's a very compelling story. You guys at Mercado had been, leaders on real asset tokenization for the longest time. Not only not fixed income, equities as well, in private. So I think that the dynamics of capital formation and flow of funds and money in Brazil is something of an inspiration to the rest of the world. And I think you guys as Mercado do play a very important role in that innovation push. Now, to the last point that you were asking about, how does the IPO market, how does the public market reward this? I think that in the context of what we're seeing right now, the markets seem very healthy. It seems like there's ample space for a lot more opportunities for companies across the board, not only fintech or crypto, but just across the board, good, sound businesses to go public and tap those markets, the windows open. I think the market is selective. Honestly, I think it rewards earnings power, it rewards moats and defensibility. What I think is interesting for crypto specifically is that for the longest time, the only public comp that you could think of was either Coinbase or one of the crypto miners. And that was all that there was it, right? And now you see all of a sudden 5 new names being listed that, again, are showing the right trades that have been adopted from a consumer standpoint. An interesting portion of these IPOs have been allocated to retail, which is a strong, important force in their participation. But what I do see is that there's appetite for crypto narratives. I think it's important for any investor thinking about coming into the market and using the equities market as a tool to access, ask yourself, is this durable? Does this make sense, et cetera, of course. But I think that what we're seeing right now is the market is rewarding the ability to invest and diversify necessarily away from necessarily Coinbase into these other options, be it the eToros or be it the Geminis or be it the figures. There's more options. And then digital asset treasuries, I think, on their own have set a different dynamic around capital formation with the depth of the US market or international markets for what is interesting around the ability to raise capital and fundamentally deliver value to investors in the form of crypto per share, right? Accretion. So I think this dynamic is all new and the markets are rewarding it. It's very interesting. Of course, be caution. Like we've seen this movie before of a lot of froth, but it's very interesting and compelling. What I would say about the M&A, I think we're still seeing a lot of activity, and we've seen big names, making moves. I think most of these moves have been driven by product consolidation and consolidation narratives, which is very interesting. It means that platforms are pushing beyond the limit of what they're building and then finding how to join forces with others of the best entrepreneurs out there. So I think net it should be positive. Still early, so TBD, but also very interesting.
Nice, and that's a great segue into a topic I'd like to raise here with Guy, which of course are the BTC Treasury companies, something that we saw, I think, kicked off by Michael Saylor's initiatives around strategy, and which I think provide a new and alternative way for us to accelerate broad exposure to crypto. And I'd like to get your thoughts there, Guy, right? What's the role of BTC Treasury companies within the broader ecosystem as an alternative for different paths into crypto for institutionals, different investor profiles? If you can comment a little bit on what brought you from Swan and Bridgewater into this initiative would be great.
Yes, so first of all, thank you for the invitation. It's great to see a full house in the middle of Faria Lima talking about Bitcoin digital assets. So I think it's a new phenomenon, right? We're talking here about access, and I think Saylor was extremely smart on realizing that there was a lot of pools of capital around the globe that would like to have access to Bitcoin or other digital assets and were just trapped. The rails are not in place. And we talk a little bit about equity and all the IPOs that we've seen, but we're also seeing a lot of credit products, right? I think the largest IPO this year was Stretch, which is a credit product launched by Strategy. So it shows not only there is appetite for equity exposure, but also for credit exposure. So what can you do as an institutional investor that has a credit mandate? You can only do fixed income, or you have an equity mandate. You can only deploy capital into equities, but you love to have exposure to this new industry or Bitcoin. And Saylor realized the need and created the solution. And that's what Strategy has been doing for essentially 5 years now. And he was very honest on saying, hey, we began opportunistically about 5 years ago as a defensive move. He was protecting his purchase power by allocating his balance sheet into the hardest asset on earth. And then eventually it evolved to a much more transformational move. And that happened not even a year ago. That happened back in November of last year, when he actually said, hey, I'm no longer a software business with 500,000 Bitcoin on my balance sheet. I'm now a Bitcoin treasury company, and one of my key mandates is to increase my Bitcoin exposure on my balance sheet and launch new products, credit or equity, to give exposure to investors into this new asset. And that has fully transformed the business. And we saw other companies doing something similar. I think MetaPlanet to date is the most successful example. It was a tiny company in Japan, worth not even $5 million, was a hotel operator. And about not even a year and a half ago, they began to build their Bitcoin treasury. And today they're about to cross 30,000 Bitcoin. And the company is almost valued at $5 billion. And that shows appetite for investors trying to get exposure to this asset class, but lacking the rails to do so. And Orange BTC is coming to Latin America with a similar mandate. We want to build the largest treasury company in the region. We'll do a lot of Bitcoin education as well. We think there's a massive opportunity to educate investors from retail to institutions about what Bitcoin can do. And the company comes to build this balance sheet. And what we're going to see is over the next few years, these companies will evolve into different business models. And we're seeing right now, some of them are trying to develop new products. Some of them are focused mainly on Bitcoin accumulation. But over time, these companies are likely to become the largest in each one of these markets as Bitcoin continues to evolve into a multi-billion-dollar asset, multi-trillion-dollar asset, and these companies will evolve along it. And we're going to see, I think, the future financial system being built under this new model.
Awesome. I want to throw a little spice in there. We talked a little bit in the background. And Randy mentioned, there's a number of companies trying to replicate similar strategies across other assets, such as ETH, Solana, and starting to seem like it will be, or there will be an attempt at the longer tail. I wanted to get your take, because I always think of Bitcoin as sort of a class unto itself, right? The whole value reserve dynamics that it's built, the fact that it is fully decentralized, right? Fully code-based. How do you see that playing out across other asset classes? And Randy, Ben, feel free to chime in as well.
Yeah, I'm very focused on Bitcoin, right? And if we're thinking about building a treasury, and we're thinking about preserving purchase power, and we're thinking about evolving as a business, you want to allocate to the hardest asset on earth. Right? Saylor, when he did so for the first time, he said, hey, I have $500 million in my balance sheet, but I'm seeing what's going on across the economy. I'm seeing the Fed providing liquidity to navigate COVID. How can I protect my investors, my shareholders, my purchase power into the future? And Bitcoin is the solution, right? So that is the model that has been playing out for the past few years, that's the model I believe the most, not only for my company, but also for my life. Like, I am 100% exposed to this asset
We
class.
have a maximalist here. so
Yes, we
Bitcoin
do.
max.
I do believe Bitcoin will transform economies and the financial system as we know it. All of that said, other players will do it with different assets and will succeed. And I think it's not even a hypothesis. Although early days, we've seen someone like Tom Lee, who began not that long ago with a small ETH treasury in the US capital markets. And I think he began with something around $253 million of ETH on his balance sheet, and he just crossed $10 billion in a few months. So hard to say that the model doesn't work in the short term. For the long term, I want to have exposure to the hardest asset on earth.
Yeah, I have a few thoughts. So I 100% agree on the thesis around Bitcoin. It's the best collateral asset in the world. And you can obviously apply certain financial engineering strategies to it. You allow capital to flow to it, especially from the fixed income markets, which is obviously a great point. I think that ETH-based DATs will also be successful. I mean, you could argue that there is kind of a moneyness factor to ETH. It's recognized as collateral on chain for sure. It's very decentralized. It's been around the longest of any of the smart contract platforms, and it has a native yield component to it. You can build businesses around it just given that it's a smart contract platform. And you could say the same for Solana. I mean, so I think that ETH and Solana as smart contract platforms, I think, are pretty easy to imagine. We look, when we're evaluating DATs, obviously we're looking at the ability to use capital structure to enhance returns, but also very importantly, thinking about what operating business is associated with it that creates synergies with the strategy. I'd be less interested in like a Solana DAT that just held Solana. We would look for something where they have a business in Solana that generates SOL, they can use their capital structure, and they can accumulate into a strategy that makes a little bit more sense. I think going further down the altcoin spectrum, I think is pretty risky at this point, especially if there's any form of fixed income used alongside of it for now. That'll probably change over the next few years. But we're quite bullish on the top three, I would say.
I'd probably just add to that that I completely agree that the second iteration, second derivative of this DAP movement is finding utility to deliver that incremental value, not only resorting to, let's say, financial alchemy or structure, but actually to your point around building a business that can operate on crypto, right? And by that means you stake, you build, you support the network, and you reap the yields and the fruit of that. I think that active portfolio management, the ability to index products, to combine flavors of exposure is something that is interesting and also worth exploring, and that probably will also deliver some additional value to investors.
Very cool. Guys, we have a few minutes. I want to sort of do a single question for everybody, get your take on what's exciting you ahead in the industry, right? I'll kick off with Randy. You seem to be making quite a few good bets in the space. What's exciting you ahead? I'll jump to you after, Ben, and I'll close with Guy here as well. And please feel free, maybe global, maybe more on a sort of regional or local perspective as well.
Yeah, I think there's a few trends that kind of dictate a lot of the way we think about new investments. I think one core pillar of, I think, what we believe is just around the world moving to more of a Bitcoin standard again. It's the best collateral asset in the world. So if that becomes true and it becomes usable across lots of different businesses, whether that be borrow lend is one really good example. We've seen it started to get into insurance products. Another utilization would be something called bit bonds, which I think is a brilliant idea, where it's a regular fixed income instrument with a slice of Bitcoin collateral, so which effectively creates an internal hedge against monetary debasement of whatever that asset is, which is kind of the complete enemy of a fixed income instrument. So there's lots of businesses that are proliferating that will benefit from that theme. I would say another big theme is I think that digital assets will start to be abstracted away, just like there's no internet department at companies anymore. Every company is in some way an online internet company. I think that will become true with digital assets. And the only way that it becomes mass market is if the complexity that exists today is abstracted away from the user. And we're starting to see very consumer-focused apps built like that, where the consumers may not even know that there's stable coins or Bitcoin or whatever underneath it. What they see is very fast payments, low costs, great returns. So I think that we'll start to see more kind of neobank, fintech-like products that are powered by crypto that are very easy for users to onboard to. And the last theme is more of a continuation of what I was saying before, just the growth of real-world assets. I mean, I think there's a lot of focus on that now. I mean, one analogy I always think of is when the traditional capital markets started to go electronic. I mean, that started a sea change, but it's been 2 decades, and some markets are still electronifying. But that was a foundational change. I would argue that rewiring the plumbing for all of the capital markets, for all the payment systems, is a much bigger change than electronifying messaging, which is a lot of what electronification of trading and capital markets was. So to have its full impact, I think will take a similar, maybe not a full 20 years, but at least say a decade or more to be fully realized. But we're starting to see a lot of momentum around that now. I think Figure is a great example. You mentioned that in your opening remarks. I mean, they have about $15 billion of mortgages on chain. They've taken on the task of bringing the entire U.S. mortgage market on chain, both non-conforming and conforming. Conforming, for those not in the U.S., are loans backed by, or they can be backed by the U.S. government effectively. I mean, that is one of the largest private credit markets in the world, and I mean, that's something that is starting to happen like right now.
Yeah, on what's exciting for me, I think I kind of go back to the point of payment infrastructure, stables, and real asset tokenization. I think Brazil, like Latin America, but especially Brazil, is unique for its Rails-first approach, right? Be it PIX, be it Drex. I think the momentum that we're seeing speaks for itself. I think it creates an environment of just showing that blockchain can be a practical use case and a practical enablement. It's not something speculative. The distribution, I think it's a very interesting element to touch upon, is the ability for you to build a product that then can be democratized and distributed if you have the right infrastructure from again the distribution people standpoint, but also technology. You need to pair them correctly, and I mean what you guys are doing, building the IFA network to distribute some of these products, I think is a very compelling story. Then also just like retail adoption in LATAM has always been very strong. Like, and not out of like, hey, I would just want crypto exposure, just out of a basic need. Capital controls, hyperinflation, the points that Guy was mentioning around hedging into a strong currency. That is the real day-to-day of some of these emerging markets, right? And LATAM having some of the situations that they had to confront in terms of macro. And so I think that the next step that I would love to see and what excites me is that same adoption on the retail, start seeing on the B2B mid-market, that opportunity. Because when that starts ramping up, I think the opportunity compounds at a much faster rate with a significantly higher, average volume rate as well. So those are, I think, are the key things that for me are most exciting.
Before I hand over, I just want to highlight one point you made, Ben, which is this dynamics in LATAM, right? Having real-world problems means it probably is the region. I mean, I've been around the U.S., Europe, to a lesser extent Asia, but I've never really seen as many practical use cases around blockchain, be it for payments, be it for real-world asset tokenization. I don't think it's a coincidence we're building one of the major treasury companies out of Brazil. These real-world problems have really driven innovation in a very unique way, and one that I feel is in a sense going to be a beacon for what we see develop across the countries. We're now seeing the effect of regulation in the U.S., which, to be fair, the U.S. was a little locked out of the innovation in the space, but you see that catching up now with Stripe coming into the space and looking at local payments, not only cross-border payment facilitation. So I think, the combination of really zooming in on inefficiencies, having the correct regulatory framework, and this broad consumer familiarity is what's going to jumpstart, institutionals, B2B, and enterprises into the space. It's like Randy said, a very unique path. I think we don't usually see things flowing that way, but it's definitely one that we can see more clearly than most here in the region. I'll hand over to you, Guy, for.
I will echo that. I think Bitcoin has a unique feature that it began grassroots, retail-led adoption. And for many, many years, the community has been talking about an eventual institutional adoption. And when would that come and how would that roll out? And I think now, especially after 2024, with the approval of the Bitcoin ETFs in the US, and of course we had the change of administration. As you mentioned, the US was fully locked out of innovation. There was actually an active attempt to slow down the industry or eventually kill it. And the administration changed. Many members of this new administration are pro-Bitcoin, are pro-digital assets. And we're seeing the institutional market is starting to adopt. And we all know, for us to move to a Bitcoin standard, we need corporations, we need asset managers, we need institutions and nation states to adopt this new technology. And now with clear regulation, with more acceptance, with much more education available, and new companies popping up in every single market to try to drive this new cycle, I think the next phase of adoption is a much more institutional-driven one, which will be a new chapter and will bring a lot of excitement for everyone who has been following this industry for many years.
That's great. Thanks a lot, guys. I hope, to Guy's point, this is part of accelerating this convergence and this bridge towards institutionals. Thank you all for flying in, for being here with us. Thanks, Randy, Ben, for believing in the mission here, for supporting us through the years. Guy, congrats on what's the beginning, I think, of a very exciting initiative ahead, and have great success with the upcoming listing. Thank you, everyone.